Welcome back. 40 points down for SGX. Globally, there is an air of profit booking, even though US lawmakers have approved the provisional budget. That is not exciting fund managers. In fact, on the contrary, money managers are of the view that this deal will only remove uncertainty, and it will only pave way for Federal Reserve to consider a tapering, as this kind of a deal will only benefit US economy and will boost US economic growth. So US markets of Wall Street last night has registered its biggest intraday fall in last 1 month. Asian markets are also muted. Global volatility has gone up, and SGX is telling us that we could be in for a gap down start of nearly 40 to 45 points. So how should one dissect the current market environment? How exactly is the risk reward ratio stacked up, and is the big political adjustment now behind us? Let's discuss that with Ajay Botke, Head of Investment Strategy with Prabhudas Lilladher. Ajay, good morning and thank you for joining us. Ajay, on Monday it was all about 6,500, 6,600, 7,000. Looks like all the bull talk for the moment has taken a backseat and bulk of the political adjustment is behind us.
I think I couldn't agree more with you, Nikunj. I think as I see it, there are 4 or 5 headwinds that the markets will encounter in the short to medium term. And right at the top of it is the US is a fear of tapering coming back to haunt emerging markets in particular, and those emerging markets which have had some issues in terms of current account deficit. So I think 2 observations there. The data that is coming from the US in terms of unemployment has been exceptionally strong over the last few weeks, and the agreement between the fractious Democrats and Republicans, which they have sealed over the last couple of days back, I think gives credence to the expectation that the tapering could start sooner rather than later. If you recollect, in mid-September, Ben Bernanke had clearly pointed out the lack of bipartisan spirit between the 2 warring parties as one of the reasons why he would rather wait and see more signs of strength in the US economy, because he was expecting a fiscal drag to come in had the agreement not happened. Now that the agreement has happened, I think the expectations of tapering starting maybe even on 17th or 18th of December, if not in the month of January, are pretty high as compared to the consensus that has more or less developed in the markets that it will only be in March that the tapering should start. So I think that is one headwind that the market clearly would have to look at. The second is it's been 4 days and the winter session has not produced any legislative business. The market was expecting at least 2 bills, the DTC bill and the increase in FDI cap for insurance to be at least discussed, if not cleared by the parliament. The third headwind, as I see it, is that there are no signs yet of any takeoff in the construction and capital goods segment. I think 3.5 lakh crores of projects have been cleared by CCI, and all of us are waiting optimistically to see on the ground a pickup in the orders for the construction companies and capital goods companies. Hopefully.
Right. So Ajay, if you have to, let's say, translate your thoughts into ideas, based on your key assumptions that we have economic bottom in place, things are looking up for 2014, how should one invest? Because markets are no longer cheap. We've seen a good run up in IT, cyclicals and even banks.
Yeah, I think one very positive tailwind is that the global economy seems to have bottomed out. I think from a high of 5.6% in 2010 for the global growth as projected by IMF, I think we had come down to 3.9 the next year, 3.6 in 2012 and 2.9 in 2013. But the IMF is predicting that 2014 will see an uptick in global growth led by US. And hence, I think all those sectors in the Indian economy that are integrated with the global economy, in our opinion, should clearly benefit from this global tailwind that is to come. So although, as you said, that sectors like IT, pharmaceuticals have seen sort of, maybe lately they have underperformed last 1 or 2 months. But I think some of the stronger names in these two sectors, we believe will continue to benefit from this tailwind that will come from the global growth. Also, some of the export-oriented sectors also should be very closely looked at. So I think companies like Infosys and Wipro in the large cap IT space, Nikunj, and Mindtree and NIT Technologies in the mid cap IT space is what we are advocating investors to look at with the medium term.
Ajay, let's talk about Tata Motors. The stock has seen a correction of nearly 6 to 7% in just the last two trading sessions. Is that alarming, or would you use these dips as an opportunity to buy out, or do you think that stock has already topped out now?
I think I would look at it as an opportunity to look accumulating with a medium-term perspective. Essentially, the domestic business, I think, continues to languish, and there are no signs whatsoever of the commercial vehicle segment in India showing any signs of growth. We are still, in our opinion, a quarter or two away from the bottoming out there. But what really matters in case of Tata Motors is how the JLR business is doing. And that clearly is a reflection on the strength in economies in the US, Europe and China. And as I just mentioned, I think the global growth clearly is bottoming out. So one needs to look at Tata Motors, I think, with a positive framework of mind in the medium term.
Right. Ajay, stay with us. Let's take a quick break on the show. When we come back, we'll get you trading ideas from Mitesh.
जिसके दिल में चोर नो मोर पकड़ो उसे जिसके दिल में चोर
चुप गाड़ी छीन लो मैं तुम्हारी
पापा मैं तो बस खेली
चलो बाहर जाओ कुछ और खेलो जिसके मन में चोर कहीं ऐसा ना हो कि बच्चों के खेल से भी आपको डर लगने लगे सर्विस टैक्स VCES के चलते भरिए अपना सर्विस टैक्स
Right, welcome back. Let's connect with Mitesh for some trading ideas. Mitesh, what is on your watch list for the day?
A couple of sell calls from the telecom sector and a few buy calls. The first one is a sell on Bharti Airtel with a stop at 333.25. Sell for targets of around 317, a short-term sell call. Dish TV is a buy with a stop below 60 for targets of around 67. Havells is a sell with a stop at 752.5, and here I would look for targets of around 720. Idea is a sell with a stop at 176.5 and look for targets of around 165, and Infosys is a buy with a stop at 3349 for targets of around 3425.
Ajay, you made a point that you're bullish on Infosys. Any reason why you're bullish on Infosys? Because for other IT companies, growth is clearly visible. For Infosys, even though the management has changed, there is no clear evidence that they have rediscovered their lost mojo.
I think our basic call, as I've said, essentially is dependent on the fact that the export-oriented sectors like IT should do well because of strong pickup in growth in America, which constitutes 65% for the IT sector's total revenues. Europe also looks to be bottoming out. UK also is bottoming out. So I think the three major geographies that contribute a bulk of revenues for IT companies clearly are on an upward curve in terms of growth. Pricing power is coming back with these companies. Volume growth is expected to remain on a stronger footing for these companies as we go ahead. Specifically, Nikunj, in case of Infosys, I think I would tend to respectfully disagree because we are expecting a 26% growth in revenues for FY14 for Infosys, followed by 16.3% growth in revenues. And here we are assuming on a very conservative basis the currency to remain where currently it is. So currency tailwinds have not been factored in FY15 revenue and bottom line numbers. And on the bottom line, our analyst is expecting around 11% growth in the current financial year, followed by a 21% growth in FY15. So you have sort of very strong bottom line growth of around 20-21% in FY15 for a large behemoth like Infosys, which has extremely strong ROEs of around say 24-25% in the current year, with a similar number for next financial year. And valuations at around 15.2 times FY15 clearly make us believe that there is a scope for further expansion in volumes as the growth in the major geographies picks up. And hence, I think a re-rating could be looked at from the current level in the medium term for Infosys as growth comes back.
Ashwini, just want your take on how you think the currency is likely to pan out, because today post-market hours we've got the IIP data, then of course next week we've got the RBI policy as well, and given the comments coming in from Raghuram Rajan yesterday, which sounded a little bit hawkish, the rupee is going to be a little edgy.
Well, as I keep saying, 61.50, 62 is a line in the sand. And as far as I am concerned, the great downtrend of the rupee has probably over in terms of a technical view. So as long as 62 holds on, I think rupee will remain relatively strong, and chances are that post some weakness, which could be even as low as 62, the rupee will bounce back finally, because he has managed to control the current account, etc. And rupee has corrected and stayed high for a substantial period of time, that now you can say that the downtrend is probably done with.
Ajay, as a house, you're extremely bullish on the agri theme. You like KSP Pumps, PI Industries, and UPL, that's United Phosphorus Limited. So why are you bullish on agri as a theme?
Yeah, I think we've had extensive sort of a tour on the rural side. Also met a large number of companies, which essentially are which are dependent on the monsoon-led rural demand. And I think from the ground, the signals we are getting is that this has been one of the best monsoons in the last nearly 10 years. The reservoir levels also are extremely high. So not only have we had very good kharif produce, but the expectation is that the sowing for Rabi season, and hence as we go ahead, the harvest that could come on the Rabi side also could be extremely bumper harvest. So I think some of the agri companies will clearly be the beneficiaries of this buoyancy in rural demand. I think both UPL as well as PI Industries, I think would benefit from the strong demand that will come from the agri side. And besides, UPL also is doing extremely well in terms of crunching its working capital management, and the demand from the other geographies like Brazil as well as America and Europe also has been on the higher side. So I think that's why our belief also is that some of the other auto names like say Hero Motors, we are very positive in Hero Motors for the same reason, as essentially it's a rural play.
Okay. Ajay, I have a simple question for you. If I look at the technical setup of the market, the technical setup of the market is rather strong. We are not far away from an all-time high on the Sensex and on the Nifty. Whereas the core fundamentals have not improved, earnings have not really bottomed out, margins are not expanding. So if the core fundamental is weak, tapering concerns they exist, 2014 is all about political uncertainty. What explains the technical setup?
Well, I think there is, as you know, there is a belief that post 2014 May, a strong sort of government should ascend to the throne in Delhi, which it is expected by the market sort of should lead to some sort of quick decision making, and some of the moribund investment cycle expectation is that I think should take off post 2014. So that essentially has been the reason, along with the avalanche of global liquidity that has been flowing since mid of September. As well as, let's not forget that the new RBI governor has been able to create a massive war chest of $34 billion by offering these concessional swap facilities, and he has been, along with the finance minister, responsible for clawing back the rupee from the depths of 69 to around 62. Let's not forget that in the last week or two, when the other emerging market currencies have been wobbling, I think the Indian rupee has been showing exemplary steadiness in the wake of re-emergence of tapering fears. So I, for one, believe that the situation that we were in, I think when the announcement in mid-May had happened and the rupee had wobbled, I think we are on a far better footing insofar as current account, trade deficit and rupee is concerned. But I still have fears on the fiscal front, because till October 88% of the full year's fiscal deficit has been achieved, 90% in case of revenue deficit and 134% in case of primary deficit. So although on current account we have done very well, we need to focus now on the fiscal worries, because that is also linked to the interest rate scenario. 60.
Okay, that's the call coming in. Meantime, some other names which held out yesterday, and they quite clearly were from the tyre space. What a phenomenal move in MRF, and what a build-up really in the last 6 months. Apollo Tyres as well shot up, and both these names had a fair amount of open interest as well in trade. Mitesh, a quick call on what you like out of Apollo Tyres or an MRF.
See, I think, between the two, I think clearly MRF is the stock to watch out for. If somebody is looking at slightly longer term horizon, it's been making newer highs. And last time I discussed targets of around 20,000. I would not be surprised to see that target in the long to medium term being, very easily achieved and possibly overachieved by about 10 to 15%. So 22,500 is what I think the stock will do eventually. There's still enough upside left in the stock. Apollo Tyres, on the other hand, I think 85, 86 will be a very difficult area for the stock to get past. Just before the deal was announced, the stock started cracking from these levels. And I think, there's a big gap as well as some weekly important pivot points on the charts. So I think I would like to bet with MRF.
Okay, well, Ajay, we're going to let you go on that note, but take a very quick break. When we come back, of course, the pre-open rates this Thursday morning.